Mercury rising, the power grid failing. Bad news for most of us, but good news if you're a utility company or a shareholder. Joining us now for a look at the hottest investments in the surging utility sector is Robert Becker, co-portfolio manager of Cohen & Steers Utility Fund. What are your favorite names if you were going to try to take advantage of everyone else's misery? What would they be?
Our favorite names are Exelon Corp, ticker EXC, and PG&E Corp. They both take advantages of solid trends in the industry. Exelon, the largest owner of nuclear plants, unregulated nuclear plants in the country. These peak record demands that we're seeing illustrates a tightening of the supply-demand for power generation. It's going to continue for several years. And this means higher power prices and higher margins and earnings growth for a company like Exelon.
Exelon, in the last 3 or 4 years, has looked like almost looked like an internet stock at this point. The dividend isn't anything to write home about at this point. Do you expect these companies to start paying more cash out?
Yeah, we think they will. For example, Exelon, we expect to grow double-digit rates of earnings growth annually through the end of the decade. The payout ratios are pretty low, so this earnings growth should lead to attractive dividend growth as well. Additionally, for PG&E, which benefits from a different trend in the industry, the outages you're seeing across the country really illustrate a huge need to invest in our power infrastructure. Regulators in California learned from the power crisis. They're actually encouraging PG&E to invest billions in their power infrastructure. This is going to lead to close to double-digit earnings growth through the end of the decade. Again, a very low payout ratio, so this should also lead to attractive dividend growth.
All right, so can you just buy a utility ETF?
Yes, you can.
All right, and what about obviously PG&E's got the money. Who are they going to give the money to build out all this infrastructure?
Well, they're building a lot of it themselves. One of the benefits for the traditional utilities after the meltdown of the merchant energy companies like the Enrons of the world is that regulators want to have more oversight over the utility industry, so they're encouraging the traditional utilities to build more of the power plants than they were in the past.
So, but they still have to contract out some of that work. Do you follow that industry or not really?
Well, we're focused more on the traditional gas and electric utilities that pay attractive dividends, so we're focused more on that sector rather than the contractors.
Not that might include like Shaw, I guess, Rick. What about Fluor Corp? Are they?
I think some of the major construction companies do a lot of the bigger plants. They're specialized ones. I'm not that familiar. Mr. Becker, deregulation was supposed to take care of a lot of these problems, giving the economic incentive to modernize the infrastructure, and that really hasn't happened. If utility consumers get outraged enough, do you think there might be political weight to try to re-regulate some of this business? And if they do, what would the impact be on your group?
Yes, you've actually seen a little of that after the California power crisis and after the blackout in 2003 in the Northeast. There's been somewhat of a re-regulation trend. But the positive regarding this is that regulators have got a little bit of a wake-up call. They realize these companies need to be financially viable. They need to have incentives and regulation for them to invest in the system. And so this is going to lead to earnings growth for many of these companies.
So you don't feel that this political backlash, if there is one, would hurt valuations in your group?
Well, I do think it's a challenge for the utility management teams to manage the utility rate increases they're going to see as a result of higher energy costs and as a result of the infrastructure investments. So I think the solution will be some sort of phase-in of rates over time, and it will be a challenge given that consumers are facing higher rents, higher mortgages, higher prices at the pump. But, you know, this is a vital part of our economy, electricity. Look around you. Virtually everything around you is powered by electricity. It's the backbone of the economy, and we really need to invest in the infrastructure to ensure reliable electricity.
Could 2003 happen again at this point or no?
It's tough to say. There has been some progress made, some incentives and regulation, better coordination between regional power grids. So I think it's less likely. But look, you're seeing outages all over the country. Utilities are starting to deploy capital to reinvest in the system. It's going to take time, though, for the capital deployment to lead to more reliability.
All right, Robert. Thanks.
Thanks for having me.
Robert Becker, co-portfolio manager of Cohen & Steers Utility Fund. I guess you don't need an ETF. You just need the Cohen & Steers Utility Fund.
Yeah, but 2003, could it happen again? That's a really good question.
Wow.